Good evening, everybody. Thanks for joining. As you all know, my name is Sashikant Valem. I've been working on this project to farm together investment into the farming by different people, and we are doing a professional corporate farming. So the idea of this session is to give an overview and also update everybody with the current status on where we are and how the farm entire project is coming up. And also for the new people who have joined for the first time in these sessions, we will have a complete overview, and then we will also open up for a lot of questions. And you don't need to wait for questions till the last minute. You can always, at any point in the call, you can start asking questions. Let me quickly share my screen. Do you all see the screen here?
Yeah, we can see.
Okay. Yeah. All right. So the project name is VVF AgTech, Tropical Farming in the USA. And in terms of the company, we'll talk about the logistics. But then the whole idea is that a group of people coming together, and then we're all going to farm in the US, especially in Florida. We'll talk about the models of investments and then the shares, all those specifics. This is the basic idea that we will farm here, especially tropical fruits, plants, and various other stuff, and then we will ideally make profits in this. Right? Our mission is to make this a $25 million AgTech company. We're not just talking about farming. We're talking much beyond farming. And the idea is that it's started with a lot of passion, but then it's very important to have a business view onto this passion. And so we're creating a very formal organization, and then we're going to run it as a very professional organization in this. By 2027, we're setting our vision to be at a $25 million valuation for the company. There are the top few ideas on what we are thinking about. The investing in the large real estate for appreciation. That's a very foundational element of our entire project. And we will have profitable tropical crops farming. We talked about sitafal, mango, bamboo, guava, sapota, moringa. And as and when we get something new, we will also consider them. And if it makes sense, we will add them. We will also have farm living, like a farmhouse, wherein investors and external people can come and stay. We will talk about how we would make revenue out of that. And we will also get into nursery business, wherein we will grow plants in various technologies. And we will also get into very high-tech farming in terms of hydroponics. So here is what we are talking about. The first would be the farmland investments for appreciation. Second would be tropical crops farming. These are the specific, some of the examples, but we'll get much more. We will start a plant nursery. We will also get into Indian vegetable trading and distribution across USA. We will also get into specialty tropical store across various cities selling fruits, vegetables, and plants. And we'll create a farm vacation experience, hospitality industry as such, like imagine a farmhouse and the Airbnb models. And we will also have a community-based, farm-based community living real estate. We'll talk about them at a little elaboration. Before getting into this, for all those who have joined new, who have not attended sessions before, this is a typical slide which I used to talk about. Why are we getting into this? There are multiple other ways to earn money. Why this? See, for me, farming is very big passion. I've run farms. Also, as a quick introduction, I've been in IT for about 23 years. I continue to work for IBM, and I'm also into professional farming for past 10 plus years, gardening businesses, farming businesses. So I've run a company back in India, in Bangalore, Smart Gardens, which is about setting up terrace gardens and automating them using IoT devices and ensuring that as a customer, they're able to grow organic vegetables on their terrace and also do it at a with less work. And also I got into a commercial hydroponics farm where near Mysore, if anybody from that area, they would recognize these names. Javagare is a village, about 10 acres of land we have purchased, and We have implemented about 4 acres of polyhouses. We are successfully growing color capsicum. We started with cucumber, color capsicum, and many others. Now we are professionally farming color capsicum in a complete hydroponic way without any soil. We grow them in grow bags. Right. And then I moved to US in 2016. I started with balcony gardens in New York, in the area of New Jersey. I stayed there for a night and then moved to Atlanta. Atlanta, I started with a couple of farms here. For past 2 years, we grew commercially both moringa and gongura. We sold directly to the customers and also to the Indian stores across Atlanta and Cumming and Alpharetta areas. So with all this, we have started this year, 2021 beginning, not this year anymore. 2021 beginning, we invested in about 1.6 million out of 10 people, and we made a joint venture where we bought about 120 acres of land, and we are currently farming about 13.5 acres of moringa and about 2 acres of sitafal. That's in frost-proof area. And after all these projects, now I have started with this new project wherein we are looking at much larger scale and where we're looking at getting into the public IPO at some point of time, right? And why do we do all this? Especially not just for the money, with lots of passion. At the same time, passion driven, but it's a serious business. Every dollar that we spend has to really make money. If it is simple passion, I would really do a lot of backyard gardening. I'll not get into farming. So it's a real passionate business here, what we are getting into. Now, in terms of what are the different lines of businesses that we have, a fundamental is going to be farmland investments for appreciation. Everybody knows that farmlands will always appreciate at a different rates. And we have chosen Florida for many reasons. One is it can grow tropical fruits very well. At the same time, Florida, a lot of people are moving to Florida, and that's increasing the land rates. A lot of agricultural lands are getting converted into residential zones. It's nothing to worry about because US has lots of lands and there is enough room for farming and there's also enough room for residential zoning. So the farmlands that we are looking into, we'll always look at something which would become a residential zone in the near future. The near future could be 5 years, could be 10 years, but then we will ensure that we are choosing those kind of farms, and then we will buy them at a right price, especially with the power of collective money. We would be offering a very good, interesting deals for us to the owners with the cash so that they get tempted and then they give us at a right price. So the farms that we have bought earlier have increased multiple times. And so we're quite happy with those investments. And in our new project, we'll be getting into the farmland investments for appreciation. And we have identified a few plants, few varieties, that is sitafal, mango, moringa, sapota, etc. The reason is that all of them are in high demand. If you look at any kind of sitafal, it's about $10 to $12 per pound. And if you're directly getting a farm, it's more than $18 a pound when it's shipped to you. At the same time, even if you want to pay with high money, you will not get them whenever you want at a high quality. So there is a huge demand for sitafal. At the same time, right Indian set of mangoes, guava, and all of these varieties. So we have identified them and we would be farming them. And we would be farming them in a high density methods wherein we would efficiently use the land, and with all the latest technologies, we would be producing high yields in that. And all the farms where we're trying to put lots of acreage, we need plants. One way is to buy the plants, another way is to grow our own plants. When we're growing the plants, we're also getting into plant nursery business. If you look at Homestead as the location within Florida, it's completely nursery business. Across the US, all the plants in Home Depot, Walmart, any place that you see, all of them are supplied, majority of them are supplied from Homestead. It's very famous for plant nursery business, and this plant nursery is quite a profitable business because for every 1 square feet, the amount of output that you can make in the less time, it's high compared to any other farming. So plant nursery becomes one of the important line of business for us. The Indian vegetable trading and distribution across USA is known to be about $400 to $500 million business. This means, just to give an example, the number of Indian stores, the amount of vegetables that are getting distributed to them are from 5 to 6 distributors across the US. Majority of them are from Florida. So we would be looking at 25 to 50 million of that pie by various methods. So we are looking at packing houses in Homestead to purchase, and then we would be conducting this business from there. So both plant nursery and trading business would be run from Homestead. And we'll also get into specialty store across various cities. The example is I run a store in Cumming, Georgia. If anybody else are here, maybe you would have heard about it. I have this store where the plants are kept there and people just go pay online, buy it, and the store is completely run by the cameras on or IoT. And I have not spent any money on deploying anybody just for the sales purpose. So we will look into multiple models. That was the simplest model. But here with the model that I'm thinking, you would have a specialty store which sells very fresh tropical fruits and vegetables along with plants. The idea is that people come to this space like going to a farmer market, but very specialized Indian vegetables. I feel this would be a great hit because of the high quality of vegetables that we would be selling. And at the same time, a lot of people are getting into the fresh quality at a premium price. And once the model works in Atlanta, we would want to franchise this across different cities within the US. And we will talk about different models. It's a very high level thought now. Any of these thoughts, we would really put up a small pilot, ensure it's working, and then only we would invest. Next is the farm experience vacation hospitality. Our idea is that we are buying hundreds of acres. For example, so far we have made offers for 130 acres of land. We will be offering in Homestead 15 plus 10, about 25 more acres. With the number of acreage that we are getting into, at some point, all of them would be at a state wherein we would be able to sell them at 5 acre a piece or a 1 acre piece to interested parties, and they would be able to continue with farming in that. So what are we going to get out of it? The premium price for that land, for the land price, and also the tropical fruits or income producing fruits that we have already grown in them for a lot of time. And we would also help them maintain these farms at a service fee, and we would also buying these fruits back from them. So which means that we are making money for about 10 to 15 years on these lands, and we are selling these lands and still continuing to maintain them, and we are able to get the fruits back to us so that we are able to sell them. So it will help in our trading business. And farm-based community living real estate. I'm sorry, the sixth one. So what I talked about is the seventh one. The sixth one is farm experience vacation hospitality. For example, all the farms, what we're going to put, we'll put about farm kind of homes wherein people are investors can go and stay based on the reward points that they would get based on their investments. At the same time, we'll open it up to the public. So the way you are able to book your residential, the vacation homes, you would be able to book them and enjoy the stay there. And as a company, we would be getting money out of that. So these are multiple lines of businesses that we have talked to, and we have acted upon on quite a number of them. For example, the farmland investments, we already made offers. We are in contract for 130 acres. We're actively pursuing a few more. And we are also looking into tropical crops, and wherein we are getting the seeds imported, we are getting the nurseries contracted for making these plants for us. In terms of plant nursery, we have identified the land, we are actively working on them. In terms of trading, we have identified a packing house. Packing house is something which will be with a cold storage and truck loading docks and all those other facilities where we would be having the ability to import these vegetables from different countries, surrounding countries in the US, and we would be able to distribute them. While it sounds simple, it's a high intense work, but at the same time, the amount of returns on this is quite high because we are talking about entering into a market which is 400 to 500 million, and we are targeting about 25 to 50 million out of that. And specialty tropical store is something which I have already piloted a little bit, and we would be expanding that so that I see a good value out of this. So rest of them, we will be trying it out over a period of time. And all of them, I see to be providing a lot of return on investment. I'll take a quick pause here. Any questions so far?
Yeah, Shashi, the point number 2, right? I see you've been specifically focused to the Indian diaspora. Is that deliberate?
Yes.
deliberately done, or?
Yeah, this is deliberately done. That is, to start with, we want to really focus on something which we could reach out easily. For example, if we get into the non-Indian community-based fruits, we will have to get into lots of documentation with the public and various other stores. With Indian specific fruits, the demand is quite high compared to any other local fruits, and the ease of for us to sell them is easy. That's the reason we have started with this. But over a period of time, we would want to get into various other stuff like lettuce, leafy greens, and any other fruits that we can really produce at a high volume and sell them and make profit out of them.
Oh, okay. So for the point number 3, the plant, I mean, are there any specific plants identified or any plants?
Sections of plants are identified. One is all the tropical crops that we are talking about. We want to make a nursery for ourselves. Simple example, a sitafal plant would cost us $20 one plant. Each acre would fit in about 430 plants. If you're talking about 40 acres of sitafal farms, we're talking about 16,000 plants. So that itself is about $320,000 worth of, I hope my numbers are right. So our idea is that we would be growing for ourselves. At the same time, we see that there's a lot of there's a huge demand for all these plants. There are only 2 major nurseries at this point who are selling these plants. And even if we are ready to pay for 10,000 plants, they don't have the plant. They'll put us in the waiting list for the next year. So we see that this is a very good market. So we're going to produce those plants and we sell them. And not only just the fruits, but also the, I have this company called IndianPlantsandSeeds.com, wherein we sell plants and seeds across the US, we ship them. So as we have been running this company for past 2 years, we have seen the huge demand for, especially for jasmines and parijat and various other plants, beetle leaves. There are about 20 varieties which are in high demand. We would be producing those and we would be selling them in multiple ways, either through one of our specialty tropical stores or very different way. Maybe we will do a lot of wholesale, and that's where our plant nursery becomes very important for us there. Does that answer your question, Sudhakar?
Yes. Yeah. So basically, the plant nursery is for the internal consumption primarily?
No. It's I would say 30% primary internal consumption, 70% to sell outside. The reason it's very important to have plant nursery is that, look at a sitafal. It takes 3 years to grow. 4th year is when you start getting the money out of that. Each tree would provide about 10 pounds. 10 pounds at even $8, you're getting $80 for one tree in that 1 year, and from the 4th year. And that one tree takes about 8 square feet, 8 square feet of land. Now, same thing if you put across in a plant nursery in just 1 square feet, you will fit at least 1 3-gallon pot. Selling that at $12 to $19, you are able to get much more returns within the first 6 months itself. So that's where we would really focus on the plant nursery. We would start setting up the models where we sell them, identify the right set of plants and start selling them.
Okay, got it. Yeah. Okay. So for the point number 1, right, this is, looks like the farmland investment, right? Here, it's a lot of thing depends on what kind of farm we need to purchase. I mean, it's basically depends on the decision making, identifying the right
Sure.
things, right?
Yeah.
So the decision making, I mean, is there any role for the investors or just the CEO or whoever is?
So far, what we have done, we have identified, we have shown to everybody, and we have done our due diligence. And then unless there is any pushback saying, oh, this is not right for so-and-so reasons, we move forward. For example, we identified a 30 acres of land in Lake Wales. We have done a lot of due diligence on what's the growth for that, what is the possibility of zoning, and what would it appreciate into. And similarly, we have done the same for 100 acres. So we have been discussing with within the investors, and then there are a few who are into real estate. They have done some analysis and they looked at the farms around it. They looked at what is the potential, and then with all the discussions we move forward. We don't get into the approvals at this point of time because that would really slow us down. But at the same time, the moment we make the offers, we publish everything, the location and everything. So at any point, if anybody has a point saying, oh, this is not the right decision, you can always come back with that, and then we will completely consider that.
Okay, got it. Thanks.
Yeah.
So I see two questions.
Sure.
Yeah, thanks for the opportunity. Very interesting.
Thank you.
So are you considering only Florida, or you're looking at other states? Like even California is also famous for farming, right? So one example.
Right. So as of now, for the next few years, I would say it's only Florida. Okay. And looking at the way we are progressing, if we find a way to scale up and exponentially get on to various other states, we would consider that. We want to really have right amount of focus and not stretch ourselves too thin. But at some point, we want to get into the real scalable model for sure.
Okay, thank you. Second question. So converting the farming land to real estate, I don't know about the US, but India, they say that farming land can't be converted to real estate. So how it works here? And
sure.
I guess
so whenever you look into farmlands, you will have to look into the zoning. Normally, they all start with EAU, agriculture zoning, and then you will see AG5, AG10, AG1, and AG2, which means that if it is AG5, you can build a house, one house in 5 acres, and none of these homes in an AG zoning would have septic or would have water connections. That you would have to have your own. Now, the moment city adds them into the zoning, then they will. It's called annex. They will annex into the city. Then that's when you will get the septic, sewer, and water connections. So that's when you will have the zoning application wherein you can ask them to allow 1 house per acre, or 2.5 houses per acre, or 4 houses per acre. The moment you get into that, you're able to construct the houses. So if you're constructing a house, 1 house in 5 acres, there's not too many regulations. As long as you just check with the county, and if it's allowed, you just go ahead and construct that. All the farms that we are buying, we will ensure that it's currently in that zoning where you can construct at least 1 house in 5 acres. Or if we're purely buying for the agriculture purpose, we would buy it at a very cheap price.
Okay, cool. So, so the current acres what you bought is all AG5, if I'm not wrong?
AG5, yeah, both of them. And the one in Lake Wales, 30 acres. Oh, by the way, all the locations, the listing of these farmlands, everything is on the farm in the Facebook group. You can just scroll down and you will see every detail of that. If anybody is around, you can always go and visit those places. Just that nobody would be there to show you around, but you can just drive by and look around. Yeah, they're all into this zoning. And 30 acres is getting annexed within next 6 months. So we bought it at 13.5 thousand, and we're expecting them to be $35,000 because the land, which is very close to our place, is already listed, and then it's very high potential of getting through that. We are about 1 mile from our Walmart Supercenter, and it's on a paved road and a very good location. So we completely focus on real estate appreciation before we get into any kind of lands.
Okay, thank you.
Hey, Hari here. One quick question. So, do you guys have any contract with I see you guys are focusing only purely on Indian vegetables or whatever it is, Indian items only, yeah?
Right.
So do you guys have any contracts with any distributors at this point?
I work personally with multiple distributors. As I mentioned, we have an existing operations in Frostproof where we are growing moringa leaves, and in Atlanta, I grow moringa and moringa leaves and gongura. So I work with multiple distributors who are at multiple locations, and I also work with direct Indian stores. So if we are able to grow any of the fruits that I mentioned here, we have huge demand. We are able to sell them easily.
Yeah, I agree with you. But what I see is, there is a big, very few distributors are there who buy the Indian vegetables or leaves, and they distribute to all over the US most of the time. Right. So do you guys have any contract with them, or
no contract?
No, not.
No
Okay.
contract. So this is not such a structured industry. If you look at the other publics or any other companies, they have distributors, and those distributors may have contracts with the farmers. But then in the Indian vegetable farming, I don't see such a structured organization there. If you have a product, if the price works, they'll just buy.
I agree with you on that point, but what happens when your crop comes and if you're not able to distribute it, then it will go on waste also. Yeah, that's a big risk also.
Well, that's a risk. But then if you look at our points, if you look at the point number 5, that's where we are selling our own produce. Point number 4, we are distributing across the US, which means we are not only distributing our own crops, we are buying from farmers around and we're distributing it, right? Okay. Point number 2 is where we are the producers. So which means if you look at the complete supply chain, we are there every aspect of it. That's where that gives the uniqueness for us, and that gives the strength for us.
Okay.
Yeah, does it make sense?
No, I see your point. My question is, you see, everyone knows, there's only one big player is Patel Brothers. Yeah, all the customers goes there. So if 90% customers goes to 90, say for example, 70% customers goes to Patel Brothers, and if you are growing 30 acres or 50 acres of one crop, and if he is not getting that, if he is not buying that product, then where will be going to, who is going to buy? That's what my, I'm not clear. Yeah, that's where I was not pretty clear on that one. How
yeah, it's perfectly right. So if we are getting into a market where there is monopoly, we'll be getting into the high risk. What we're getting into the monopoly wherein there is a huge demand for high quality fruit. That's a market. Patel Brothers is just one store that's delivering it. I work with multiple other stores. Every store in each and every area has its own uniqueness, and everybody is doing well. For all of them, it's important to have a right set of high quality fruit or vegetable, and with the consistency. And if you are able to do it right, yes, everybody has an option. It's like a restaurant. Anybody thinking of starting a restaurant, if they wonder there are 10 restaurants all around, how would I do it? Yeah, you always have people to eat, and then everybody wants to have something new. So if you do it right, there is always a market there. Okay. But yeah, we are cognizant that these are the risks, and we have plans for them.
Okay. Yeah.
Any questions? Because this is quite an important slide.
Shashi, this is not a question about the business line of item, but like the taxes, right? So are you gonna issue K1, or how does it work in the end of the year?
That's a good point. So we're getting into the modalities of the business. So we are creating a C Corp. Right? We have already created one C Corp in Florida. We're dissolving that, and we're going to create something in Delaware, as per the suggestions from the attorney now. The C Corp, as from the C Corp, we'll be raising private equity. We would be providing shares to the people, to the investors, and there won't be a K1. K1 is for if it is a partnership LLC, that's where you get the K1. So here you get a share certificate wherein you would own those shares of the company. Does it make sense? Does it answer your question?
Yeah. And you have some dividend paid to the share, or how
yes. So we plan to have dividends, but we are deciding on when and what. There are too many ifs and buts. So we are coming out with a PPM, private placement memorandum, and the term sheet wherein we would talk about all these things. So at a high level, the idea is to start paying the dividends as soon as we start making certain amount of money after holding certain amount of money into the organization for the future development. So we will not have a perfect clarity on exactly when we will start paying the dividends. We are hoping that it will be starting year 4. So the first 3 years is when we would be constantly investing a lot into the company itself.
Yeah.
Initially, we didn't have even the year 4 because we were talking about only growing. Now with the number of lines of businesses, we have opportunity to start making money within the first few years itself. So that's where we would start making paying the dividends.
Hi, if the shares you issue, if I want to sell them and get out of them,
right.
What's the exit strategy?
So this is not a public listed company, and so you will not be able to sell the shares the way you sell it in the NASDAQ. trading platforms. But we are getting into the models wherein we would get into a secondary market of private equity shares. If you guys are familiar with Start Engine or any kind of those portals, we would work similar to that, and we will enable those secondary market for shares. But then a lot of nitty-gritties have to be worked out. So we will confirm on those aspects. But we want to have the ability for investors to exit not at any point of time, maybe after a certain lock-in period, and then at any point of time they'll be able to sell the shares and move.
Maybe Shashi, you can look at the Acre Traders, right? They do similar kind of stuff. So
Acre Trader is completely different. They're not into C Corp, they're not into shares. If you look at the Acre Trader agreement, you would see them to be giving you an operating agreement wherein you have no option to exit out of that. They have a
fixed like 5 years, 10 years as
right. Yeah. So which means at the end of those 10 years or 5 years, they would sell the property and distribute the profits. So here we are not working specific to the property. We would be having all the properties into the same company. We would continue to buy the properties. The way you have to look into is you are investing into a company which is evolving, and the value of the company is increasing and the share value is increasing. You will have to start calculating your increase in the share value and look at the exit path. That's how we would work on this model. Acre Trader is a very, very important model that we have looked into, and all my thought process comes from that. But then we moved quickly out of that because that really restricts us to make into a boxes, multiple small boxes. For example, if I buy the 30 acre of land, it has to have only those shareholders in that. Then the next set of land, I have to have a different set of shareholders. Let's say 30 acre of land didn't do well and 100 acre land did well. The investors from the 30 acres would not get benefited, while the investors from the 100 acres would get benefited. Here in this model, when all the lands are getting into one company, all the businesses are getting run into one company, you have a great opportunity for this company to grow, and valuation of the company increases, and so the share value increases, and that's how investors make money.
So before we invest, would we have clarity to these questions?
Oh, yes, absolutely. Absolutely. So the stage that we are is we have taken $1,000 soft commit. This is only to book your number in the queue, wherein we are having multiple rounds of investments. We're totally planning to raise about $6 million, divided them into 4 different rounds, each of $1.5 million. We are already booked with a total of 65 people who have paid these soft commits, which means if somebody is coming with $100,000, they will have 4 slots. If somebody coming with $200, they have 8 slots. We have multiple, at least 7 to 8 people who are coming with $400,000. So within about 40 people, I see that 1.5 million would be completed, then which means the rest of the people will be in the second round. So similarly, we will have third and fourth round. My idea is to get all the paperwork completed by mid of January. Share it with everybody, and then you guys will have time for about a week or so, wherein you can get them vetted through your attorneys and then come back with a decision of investment.
So Shashi, regarding the share prices and exit clauses, I have a quick. So for example, if you're selling these shares at this point of time, for X amount, so how would you define the share price or calculate the share price if somebody wants to exit after the set like lock-in period? So would that be based on the ongoing company evaluation on a periodical basis?
So we will have a company valuation on a periodic basis.
Okay.
Yeah, for the initial period, up to 6 million when we raise it, it's going to be the evaluation that we would tell. For example, today we will talk about $10 million valuation. We will raise about $6 million, right? And this is based on certain amount of acreage of growing, and then the amount of revenue, the amount of profitability, and so on. All these calculations. So after about 1 year or so, or maybe a few years, I would say, for the next few years, the valuation is what we are projecting. After we have enough data, we would get into a proper valuation system wherein we would get an external party to come and evaluate that.
So exit and entry is based on the number of shares. It's like we are not investing with specific to a specific property, right?
Correct.
Like you are investing money in a company that is growing. Let's say somebody come up with 100,000, let's say 4 shares.
Yeah.
So if he has to exit, it has to be either all or none, or they can choose. Let's say he wants to sell the 2 shares and keep the 2 shares with him.
Yes, we want to enable that model. So it's something similar to what you guys are trading on the typical public trading platforms. You buy 100 shares, you sell 50 shares, you buy 2 to 5 more shares. That's the model we're planning to get into. And unlike public offerings, these would be restrictive. So we will come back to you on what are the modalities and how easy or tough to exit from these private equities. So based on what you see, you will be able to make a good judgment. And one thing important is everybody has to note that you need to get into this only if you have a long-term view. Consider minimum 5 years that you want it to be in. While we would want to ensure that people are able to exit for various reasons after 3 years, but then in your mind, consider that if you have cash to invest into this for the next 5 years, that's when you should get into. That's the suggestion that I would have personally for anybody. And our idea is to make it so flexible that at any point of time you get in and get out. But the initial period, it will be very restrictive because of the private equity fundraising models.
So that's you say for 3 years, at least a minimum of 3 years.
At least minimum of 3 years, yeah.
Okay.
And by the way, we are working with one of the Bay Area-based attorneys who are very well versed into startup funding, and we are going to set all these criteria for him, and then want them to come out with this right model. And whatever is the model that we are coming out with, we would be proposing it, and you would see it in a real documentation. That's when, by the way, this entire thing comes under Securities Exchange Commission. So we would be filing our documentation to them. And that's when once you go through this, that's when you get into proper documentation signatures. That's when you would get into the investments.
Yeah. And one more thing I see on the screen is line of businesses. Mm-hmm. So this thing, I have this in my mind. Agro tourism. Is it something that fits into either of some of these points here?
Yeah, number 6.
Okay, number 6. Okay.
Yes, farm experience vacation.
Yeah, that bring us some revenue while we.
Yes, exactly. So the initial idea is that we're thinking we will just go with a simple camper van for us, and then maybe try out with a couple of them because they are quite easy to start with $20,000 each. Start booking them up, and then if you see the momentum, then we would look into what kind of investments that we wanted to make and at what return on investment. And then if we are doing it very well in 100 acres, if lots of people working out well, then yeah, we would focus on that more and increase the revenue out of that.
Yes, I see on the 100-acre land, there is already some existing crop that's generating revenue, right?
Right. So we have a $250,000 of revenue coming out of the 100 acres of land. That land has 70 acres of pomelos, they're called chacota also, 28 acres of navel oranges, and 2 acres of lychee. So all of them together are generating about $250K of revenue on a yearly basis. According to the owners, I met them, I posted the videos. They're quite involved in their activities, and they get their works done just by hiring a few people. And they say that it's about $20,000-$30,000 cost in a year to make that happen. But then I would want to factor in about $100,000 cost. And even with that, we're getting about $150,000 of profit out of this 100-acre land. And we're investing about $1.4 million to buy that.
So how many years would you think to break even on that land? Let's say, I mean, looking on the risk side here.
Mm-hmm. I mean, you're talking about the break even?
Break even, yes.
We will never look into break even on the land purchase itself, because break even is looked into the working capital. But then if you look at the land purchase, the moment you sell it, you should be getting much more than what you're paying for, which means that you are making profit there. So to make revenue on this land, let's say if you're putting an investment of 100K, if you're making 250K, which means that you're breaking even, and then on top of it, you're getting profits. But then getting 1.4 million out of that, considering 150,000 to be a profit and a lot of management effort, management costs and other overheads getting out of it, even if you say, okay, it's only $75,000 is the actual profit. 1.4 million divided by 75, whatever is the number of years, that's the break even if you're considering asset also in the break even, but we would never consider that to be a break even for considering the asset there.
Okay, sounds good.
Hi, Shashi. I have a question. So you said 3 years, it's restricted, right? Have you modeled anything so far, like estimate what it could be each year?
Yes. So we have the models for Sitafal. We would be talking about it the moment we have some clarities on this documentation and everything. But in a 20-acre Sitafal, we are seeing a revenue of $7 million over a period of 10 years, starting at 4th year, the growth period, and a profitability of at least $3 million in a 20-acre Sitafal itself. So we would be talking about it in the coming sessions, wherein we would display the number of acres we're talking about Sitafal mango, and we will project certain values out of that. So at a very high level, we are talking about a year-on-year return of 8% in the overall business. But then at the end of the day, this is a business. There are many things that can go wrong. So that's why we would never say that you have to, this is guaranteed for you. This is a return that we are projecting. And in a very optimistic way, I'm seeing returns much more than 20%. Right? Just for the Sitafal itself, we are seeing a multi-million-dollar output out of that. Right? So we would be talking in one of our sessions on different line of businesses, different crops, and the output out of this. And then we'll also project that. So let's take a simple example of Sitafal itself. Let me just project that first. Right? So is this clear?
Yeah.
Okay. Let me just. All right. So the number of trees per acre, we're talking about 440 at 8 feet by 12.5. And we are considering, just for the example, 40 acres. And we're talking about revenue per pound is 8 and cost per LV for harvesting, packing, shipping, and marketing as $4, which means per pound, we're talking about the profitability of $4, right? And this gets converted into this. So year 1, 2, 3, this is a growing period. There is absolutely no crop, nothing coming out. We're only investing on the cost. And year 2, we're talking about, so year 4, we're talking about 20 pounds per tree. 20 pounds per tree is about 30 fruits, and it's easily doable. And this data we got from various sources in terms of looking at farms in India, looking at local farms, and we have made a conservative estimate. And we're talking about 20 pounds each tree, both year 4 and 5, 30, 40, 45, and 50 for the next years. And these are the productions. This is the produce that's going to come out of this 40 acres, right? The translation of that in terms of revenues is this. So in a 40 acre, we are talking about a $35 million coming out of that, right? And we would never just get into only one fruit, but we would diversify into multiple fruits. And our costs are going to be 23 million out of them. And then we have a profitability of 12 million, just in about 40 acres of Sitafal. How did we arrive at this cost? These are the different heads that we talked about: the farmland purchasing cost, the administrative cost, the operations management, a bore well, irrigation pump, automation, fertigation. So all these costs made together, we made these estimates, right? And some of the validations that we all can look into is, what if you go ahead and try to buy a Sitafal anywhere, either online or in the store, there is nothing less than $12, right? We have considered $8 because we wanted to be conservative in that. And we are looking at direct selling to the customer and also wholesale. So at an average, we have taken $8 to be the cost, the revenue that we would get out of this. So the same projections would be done for different fruits that we are looking at. Even if we go for Sitafal, these are the numbers that we are talking about. That's the reason I'm saying optimistically, it would be much more than 20%. But then I want everybody to set their mind on a conservative returns of 8%. And also we have to be prepared for unforeseen situations. Imagine a situation, we planted everything. 2 years crops, they did very well. And there is a hurricane, everything lost. So we have to really spend the cost again, right? It may not be complete cost that we have spent, but a good amount of costs have to be spent. And then we are reset almost like to the year one, wherein we are starting from the beginning. So those scenarios are inevitable. We are also looking at ways to get insurance covered, but there is no specific insurance for Sitafal and other plants because it's not a mainstream crop. So we are working with the insurance companies to see how they could underwrite this and then talk about a premium and what would they cover into this. At the same time, we are also continuing with the income producing crops like pomelos, which are already established, which are producing income. And so we wanted to be safe. Even in these scenarios of calamities, our land investments is not going anywhere. That continues to grow. The influx of people into Florida continues to grow. So we are in a safe hands there. And as a strategy, we are looking at investing 50% into the hard asset, into the land, and 50% into the working capital into the business. Sorry, I think I digressed a little bit. So does it answer your question?
Yes, it does. And I have an additional question just relating to that. So you're saying 20% of profit margins are from fourth year onwards, approximately, or 8%, whatever, right? Yeah. So is it going to be paid as shareholders' profit, or it's just increasing the share value? So
increasing the share value before that's some of the business strategies that we want to really look into. What is the dividends that we want to provide, and how much of it is to hold and reinvest and increase the valuation of the company by reinvesting into different aspects of it. So we have to take a decision on that. But at this point, I don't have a concrete answer on how much we want to provide as a dividend and when do we want to start that. So we will wait for that concrete decisions on that.
Okay, thank you.
Yeah, and from the investment perspective, again, as I mentioned earlier, please invest only the amount that you could that you don't need to get back for the next few years. Yeah. Right? If you have 100,000, please invest only 25,000. Invest the rest into various other things because if you want to diversify, right? Because this is going to be a long term. And when it gives you the returns, it will be huge returns if everything goes well. When it goes bad, half of it, like whatever you're putting into the business may go bad. Whatever you're putting into your land is going to be perfectly safe and it's going to appreciate. So which means that your 50% of your land investment is going to increase at a scale where it is based on the industry, and then you'll make money out of it. So I just want you to be cognizant about all these things. I'm not just you, for everybody in this call.
Thank you.
Yeah. And by the way, just a quick disclaimer. This is not something wherein like you are investing into a strip malls, investing into the farm the flipping of the real estate wherein you make a 20% year on year. Absolutely not that. You're getting into very different farming activity, which has high risks, high profits, and it's not a mainstream. This is being done. I don't see a lot of people are getting into these models. This is something we are getting into this. And I wouldn't say the first time, but then very unique. So there are enough risks at the same time, enough rewards. And I'll tell everybody that if you look at it both from your mind and heart perspective, you will see it makes sense. If you're looking at clearly from the mind perspective, it looks extremely risky. So please take a decision at your own, based on your own risk appetite on this.
So, I mean, like from the your point of view, you're already experienced in this. Yeah. Would you estimate like maybe 5 to 6 years after then you think like this, you'll be confident about this, or is it?
Oh no, so let me share my experience. Mine is an extremely rosy experience. We have invested beginning of the year 2021 at about 79 acres in a land in Frostproof, that has increased in value by 2.5 times. Does it mean that every year it increases? No, it may not be. Is it because of COVID? It could be. Is it because of influx of people in those areas? Yes, it could be. So there are many ifs and buts in that. There are lands that have increased by 6-7 times, right? There are many ifs and buts in that. But then my confidence, but by the way, while you are all investing your money into this, I'm investing my career, my time and everything into this. Why am I confident about this? The demand for good quality foods, especially here in the US, is very high. The ability for Indians or for any other people to invest into high quality is very high. So the ability to grow is very good, because I have been roaming in Homestead area for many, many months, and I've seen good amount of crops growing, and I'm buying from them, and I'm able to distribute. I buy from them and sell locally. So I'm able to experience and all this one. That's why I'm very confident on this.
Okay. Yeah. Thanks.
Shashi, to add to that, right? So I've been investing in traders for a while now, and I've never seen less than 11% of return. Like worst case is we exit around 11%, right? There are properties I invested like around 80% also.
Sure, yeah, that's interesting. Which area are you talking about?
I invested like California, some of them in California, not much of in Florida, Illinois, Midwest area.
Okay. So if you look at many of the data, historic US farmland appreciation data, I see anything about 6-8% easily in that. But then, especially Florida, I want to increase that number to much higher. And while I don't have data to especially prove that, but then I have seen it personally, experienced it. So that's the confidence that I always bring onto the table.
Especially last couple of years, farmland is appreciated huge. I don't know why, but it's going up.
That's true. Yeah.
So your focus is mostly to do farming in Florida, or you're trying to explore other states as well?
So far, for the next few years, it's going to be Florida.
Okay.
And specifically South Florida?
Central and South Florida, I would say. Because if you look at our first 30 acres, it's in Central Florida. 100 acres towards south, Fort Pierce, and 10 and 15 is completely in South Florida.
Okay, thank you.
Any questions?
How far this farmlands what you bought 30 acres and 100 acres one?
Between those two, it's about 1.5 hours of drive.
Okay.
Yeah, that's between Lake Wales and Fort Pierce.
And Shashi, I have one question.
Sure.
How are we planning to manage this line of business? All of them are going to start at the same time, or what is the strategy to manage?
That's a very good question. So the farmland investments, that continues to go on the way we have invested already or made offers, that will continue. Immediately, beginning of the year, first quarter, we would make our move to go down to the line number 2, wherein we would start pushing the trees. Pushing the trees is a word used for cutting down the trees and then planting the new ones. We are expecting the trees to be available starting April, not so many acres, but then we are working with nurseries to get us on a contract to grow them for us, some of them. Plant nursery, I'm thinking maybe by first quarter or second quarter, because by the way, all of them, we're buying the land with the nursery, especially in the plant nursery part. If that works, then we are really jumping ahead and then starting up with the business by itself, rather than buying a land and then building something on it. That really takes time. Trading part of it, I would say we will start with this, but it takes at least a year or two for it to settle. It's a very intensive job, so that will go on. And number 5, by second quarter, I would say. Number 6, immediate. Number 7, few years down the line, I would say. That's not going to be immediate.
Yeah, okay. Yeah, at least the number 3 and 4, right? The plant nursery or the distribution are, require a lot of presence and labor intensive.
Right. And they are the ones which are going to make straightforward money. So you'd be surprised that if these two things get successful, by end of year 1, starting, let's say, quarter 5, I think we'll already start making money.
Yeah, okay. So when we take over this nursery or the distribution unit, so we are taking the existing infra and people are running this continuation of business, right?
Not really. So take an example of 15 acres of packaging business. It has 14, I would say 13.5, 14 acres of grows already. It has dragon fruit, guava, and longan. According to their numbers, it produces about 450 to 500,000 of revenue. We are taking over that farm along with the infrastructure, but you will not get any of those people, in the sense those office bearers, office staff or anybody. We will have to appoint our own staff and start working on it. I'm not much worried about maintaining the farms because we have support services. So let's say there is a trip. You have a company coming up, looking at what the issue is, getting the chemical, getting their infrastructure in terms of trucks and sprayers and everything. In less than 24 hours, they finish the spray of 15 acres. It's no more a manual activity, and it's at a simple cost, right? So we'll be able to handle all of them, outsource them, get those works done. Our biggest job would be to look into the entire facility and start looking at our vendors in terms of the farmers from South American countries, looking at our customers, which are the Indian stores, establishing this entire supply chain and figuring out a way to take orders, fulfill the orders, ensuring the quality. That's the setup. It will take a good amount of time. I'm assuming that it will take at least 6 months to 1 year easily on that. And that's about the point number 4. But this is based on if we get that particular offer accepted. They have quoted $2 million. We have asked for 1.7. We're trying to negotiate on that terms and conditions. So if that works out, we're really hopeful to really make a good way forward on that. And in terms of the plant nursery, the offer we made, the list price is about 1.35 million, and we are looking at 1.1 million. It's a 10-acre land in a prime property. The expected appreciation in next 3 years or 5 years, I would say, is about $2.5 to $3 million. It's a huge appreciation potential there. The good thing about that land is I have also posted that land's video on the Facebook group. It has the complete running nursery. It's on a lease to the person, and we are looking at a way to talk to that guy to continue that lease and grow things for us. So he would continue his own stuff, maybe half of it continues to pay the lease, and the rest of the half of it he will grow specially for us. So we're looking at various models that way. And the good thing about Homestead and the areas is the availability of skilled labor in this specific area of nursery growing and all that is good. So if we are able to do well, if we are able to offer right models for them, we will have a right set of people working for us on that.
Actually, one question related to operations. Operation is a big area, right? So I know you cannot, there physically, running the show. There are a lot of things comes with, right from watering, just making sure, the plants are growing, at the expected rate, or there's a need of chemicals. There are a lot of things goes, the periodic, vigilance is required. So everything is kind of outsourced to a specific contractor or services people, or you have a different services offered by different vendors?
Different for different people. Let's take an example. 30 acres is a complete orange grove. The contractor for that is the person from that area of Lake Wales. He will not handle Fort Pierce. Fort Pierce, we will look into another contractor. And different locations, we'll look into different contractors. And in each and every farm, we will get into the IoT devices, wherein the key factors like watering, we would look into a way of understanding what's the issues with the watering and upfront trigger alerts. But at the same time, these contractors are tasked to go there every week, ensure that things are running well. While we are going to automate, there is also going to be a redundant manual check also on these aspects. And we are also taking services of EOS. EOS is the low orbit satellite service, which monitors our farms, specific to our farms, and alerts us on any change in the situation at the farm, because these low orbit satellites are watching these farms and they are able to monitor the leaf health, and based on the chlorophyll content, the reflection of that, they are able to figure out nitrogen efficiency or deficiency, and also the water issues, because that gives a dry spot. Based on this, they provide alerts, and then we can take actions on them. So we have multiple methods to handle this. But on top of it, when we are getting into this kind of size, I'm going to be physically in person looking at it full time on this.
Shashi, the existing 30 acres and 100 acres, right?
Yeah.
The current fruits of like dragon fruit or longan, do they have crop insurance?
30 acres is orange. Orange has a crop insurance, but then what you get out of it is nothing in that, right? But good thing about orange is that federal government gives a lot of incentives, even like a COVID assistance and many other things, but then you can't expect the numbers that I've shown in Sitafal. So they're only like just there, right? Because the whole reason of orange not doing well is citrus greening. And so farmers are getting out of that. So we don't want to expect much out of it. But then the pomelos and lychees are ones which are making good money in 100 acres. So far, the current owner have not taken any kind of special insurance, but we are going to look into those insurances and take on our own.
Okay, so my question would be like, if say any insurance companies is not going to provide crop insurance for Sitafal or any one of the fruit, one or more than one fruits that we are going to plant, are we going to change the strategy? Are we?
No, we will still go ahead with Sitafal. So that's a risk in our entire portfolio. We will still have high risk based plants like this, which also gives high profitability. We have seen enough of Sitafal farms in Homestead area. They're doing very well. They have not stopped farming because of these issues. So while we push the insurance companies to get into the give us the insurance, we still will continue taking that risk.
Okay, thank you.
Yeah.
So have you farmed these any of these fruits and have experienced like how they are going to perform, because these are native to tropical areas, right?
Yes. So personally, we have started a couple of months back with Sitafal farms. So we planted them, we bought them, we planted them. But we're working with the farmers who are already growing them for the past 3 years and who are selling the fruits. So that's where we're taking our experience from.
Okay.
By the way, guava is one of the large producers in Homestead. And if you look at Indian stores, the volatility of guava, you would see sometimes it's even sold at $5, $4.50 to $5 a pound. And guava is a very vigorous fruit. It starts from 8th month itself and starts producing a lot. So we're going to have guava a lot in our farms too. And by the way, it also goes down to $1 because there are a lot of people who are planting them, and there is a high risk in that one. But because of our models of number 4 and number 5, we will have an edge on over the competition. I'm open for more questions. There's a question, there's a chat window by Ravi. Ravi, are you on the line? Okay, let me read this out. Are you guys seeing the question?
Yeah. One question, again, Gopi here. So are you looking at this permaculture method? Like, if I understand correctly, what it means is you will have one fruit tree and around the fruit tree, you have vegetables.
Right.
So it produces multiple way of income.
Right. So I understand permaculture, but we're not getting into that at all, because so far, in my opinion, with my experience, what I've seen, this is very nice in a small setup, wherein if you're doing it personally and maybe in a very, very small scale. But in the business like this, that is quite risky and it's not viable. For example, in the model of one fruit tree having vegetables all around, you won't have a way for the tractors to move around. If you don't mechanize this, your cost of operations is extremely high. You will not make a profit in that one. And it has to be well structured and it has to be industrial. That's why for many people who are into permaculture or any of these emotional ways of farming, this is not the model that we're getting into. It's not that I don't like that, but it's not business viable. If I want to do it in a couple of acres for my own self, I will definitely do permaculture, but not in the business aspect of it.
Okay.
There's a question by Ravi.
Yes, I put the question on the chat.
Okay, got it. You want to ask about that?
Yeah. So, I mean, there are 7 businesses and there's too many businesses for one person to manage. So I'm kind of worried about it, So do you have a plan? How would you manage the resources and all that?
Yeah. So if you look at all these businesses, they are very interlinked. They are like connected to each other very tightly, right? The moment we complete the land investment, when we complete the purchase of it, number one, activity is out of the activity, right? We have the land with us. Now, number two, we talked about different contractors for each and every area who would manage that. So my job is to structure this right, like a typical work breakdown structure in architecture, and then look at parties who are executing that, monitor the parties. So as a backup, we're also working on a model wherein we will have somebody within the investor team identified who would be enthusiastic about it, who would work with me on this. At some point, if somebody wants to join me in full time, that's something which we want to look into. It's not the experience that I'm looking at, it's the attitude and the willingness to be on the ground in the sun, running around for all this. So that's where we will have a lot of backups there. But for now, we will have the contractors who would be working with us and I would be monitoring it.
Sounds good.
Yep. And we want to really get into the employees mode and make it really scalable, because none of these organizations can scale if it is just run by one person. There will always be one leader, but it has to be followed by a lot of business continuity and backup planning. So that we're really working on that.
Right. Yeah.
And it's a great opportunity for anybody within the investment teams. If you want to come out and join me in that actual effort, yes, let's do that. It's going to be voluntary to start with. At some point, if everything sets right, yes, it will become a career too. But don't expect it to be simple work. It's going to be extremely hard, but there's nothing simple. I mean, each and every of our jobs are very hardworking. So as a typical nature, we're all hardworking. So it's going to be different hardworking in this. And it's going to be fun too.
Yeah. That's why we are all here, right? For the passion of, yeah.
Absolutely.
Do you have a timeline or a deadline for this phase of investment?
Yeah, see, 14th January is when we are closing 30 acres of land. I won't be ready with my documentation by then because of the holidays and whatever, and the complexity involved. The attorneys are still taking time. So we are going ahead and closing the land. I'm raising the capital with a simple, based on the simple interest. I'm going to put all the risks on myself and then take an interest and then put a security of that land. And anyway, I just need only $400,000. So I'll close the land. And meanwhile, we are trying to complete the entire documentation, maybe by 3rd or 4th week of January, and start getting the money from the investors. So all of you can consider that next 2 to 3 weeks, have your money ready, and then you will see the documentation from our side, go through the documentation, and then you can start investing.
And what is the mode of payment?
It's going to be bank transfer to the C Corp bank account that we would be creating. And we're working on portals wherein you would be able to integrate your accounts with the platforms like Kata, or some of them. We're trying to look into those platforms wherein you make online payments and you have everything tracked on a portal.
Yeah, some of these payments, they have some restrictions, right? So, transfers and all that.
Well, any wire transfers should be good.
Wire transfers is good? Okay.
Yeah.
So timeline-wise, towards the end of January?
Towards the end of January, but then be prepared by third week, just keep the money ready and be prepared to spend some time going through the documentation, and maybe by end of January, we will have the transfer started.
That's for the first round of investors? You mean for the first round of fundraising about 1.5 million?
1.5 million, no. So I would say both first and second round, because the speed at which we are going for multiple properties, that in Homestead 15 acres and 10 acres, we would be raising almost 3 or 4.5 million very quickly.
So the share price is going to be the same for first 2 rounds?
No. So it's going to be different for each round. So the first round of investors who have paid the soft commit upfront and who are paying the actual investment would always get a benefit compared to the second round, and so are the third and fourth round people. And all the 4 rounds of people will have a great benefit when we open it up for the much larger funding rounds. So every round will have a benefit on each other.
So you'll pick up with all such details in the due course of time, like what's the exact share price.
Yes.
So you'll be letting the investors know individually, or you'll be sending out a link to the people?
Same. We will go with the meeting like this. I'll be presenting what's the share for the first round, second, third, and fourth, and who's getting in the first, second, third, and fourth. Everything is going to be on this recorded session, and it will be published.
Okay. Sounds good.
One question related to investment, first round, second round, third, and fourth round. That is for a specific property or land, correct?
No.
Oh, okay.
This is for the company. All the properties that we are talking about will be part of that. Future properties will be part of the company, and future rounds will bring in the money into the company.
That's what I was thinking, because third and fourth round is, when one of the Excel or another presentation I saw, that's more for, your operations and all. But I think it's just for buying a land that's first and foremost important.
Right. I'm sorry. So let me repeat this. Whenever we raise capital, money comes into the company. We use that money to buy multiple properties and invest in the working capital. That's a simple logic. So let's say we raise $6 million. We buy 4 properties. We are working on certain amount of working capital and a certain amount of activities. We realize that we need more capital for a specific reason. Let's say we are getting into in the number 4, we wanted to have more capital for ABC reason. We mentioned why we are raising it up, because raising is a diluting of the shares. And we talk about how much we are raising and what is the value of the company we are evaluating it, and so how much dilution we are getting into. And based on that, we will raise it. So let's say 5th round people, they still have ownership on all the properties that are bought upfront. They will still have ownership, profit and loss on the working capital. So it's the same for round 1 and same for round 5, except that round 5 person would have bought the share at $1. Round 5 person is buying at $2. Did I confuse you?
Sorry. I know there's much more detailed probably.
I'm sorry?
Discussion. Yeah, the reason I'm asking is you're buying a land more and more, the value of the company is also going up, and you're also diluting the share. So that's where a little confusion, right? So you initially...
Consider this way. When you say dilution, the number of shares are getting diluted, but the share value is increasing, which means the number of shares that you have holds certain size of the company, right? Which is good.
Okay.
Take an example. You have paid $25,000. You got 25,000 shares because each share is $1. Now, round 5, the share value is $2 a share. Somebody paid $25,000. They got 12,500 shares only. So for a $25,000, you have 25,000 shares. They got 12,500 shares only, right? Now, when you're selling this, you are able to sell your share at $2 and you have $25,000, which means you're worth $50,000 in the company.
But Shashi, quick question here, right, on this approach.
Yeah.
So when we say round 2 is like $2 per share, how do we decide that? I'm like, or I mean, do we need to do a reassessment of the offer?
No, for the initial 4 rounds, we will not do that. We will finalize it upfront. We know what plants, how many acres we are planting, right? Based on all these things, we would be projecting the total valuation of the company. And within the 4 rounds, we know we are raising 6 million total. So we know for each round how much we are raising. So we're going to put up that valuation based on certain data, and we present that. So for example, the second round person, if they are paying $1.02 for the share. Now, if he has a question on why he's paying $1.02, that's the data that he will look into. We will get into the professional valuation after all these rounds, for the further rounds.
Okay.
Because there is nothing much to really for, and we don't want to get into that huge valuation there. And the way an individual in the second round has to look into is looking at the third round, how much he is gaining already, not looking at the first round, how much he is losing. So which means if somebody looks into that, they will never be able to buy an Apple share, because a few years back, that was always low.
No, I agreed. But on what basis? Like, I mean, like, that's what is confusing.
This is the data points, like the way I showed for Sitafal and those things. And that is not going to change anyway within a month or 2 where we are raising this, right? Just the basis that the first 1.5 is just the queue that we are starting with. Because the people committed in advance, upfront, that's where they're getting that value.
Okay. So we are going to have like multiple rounds. Like say if you're raising to raise 6 million and say 2 million in the first round, 2 million in the second round.
1.5 equally distributed. 4 into 1.
In the first 2 rounds.
First 4 rounds. Each round 1.5 onto 6 million.
Every round. Okay. So for each 1.5, you're going to divide it to number of units, like divided by 25,000, right?
No. So 25,000 is only a minimum investment cap that I am saying. That's my restriction that I'm putting. But the value of the share is based on the round there. So for now, assume that each round will have certain value of the share. That modality may change a little bit because the attorney may say within the actual capital raise, you may not be able to change the value, or you may be able to change the value like this. So that I will confirm with the attorney and get back on that. But assume that the value would be different.
Okay.
Now, so my only logic is this: people who have committed to this upfront, based on their whatever knowledge, they should get benefit. People who are committing later, they will get a benefit over the further people.
Yeah.
Right. That's the logic we are getting into. The exact modalities, I will work with the attorney and I'll get back on that.
Yes, Shashi, I have a question regarding the valuation. So for valuing the whole company, would you be valuing like at round 1, round 2 each time, or like would you fix a value like after round 4, like assuming you raise 6 million and you value based on that?
Yeah, we value based on that.
Okay.
And now with all the new line of businesses adding up, new amount of properties that we are buying into, I really want to have to reconsider based on certain logics on whether it's going to be 6 or we need a little more, or what should be the value. That's something which I am working on with the attorneys and some of the business advisors, and we would get back on that.
Yeah, but for the value you will be giving around Jan end would be like would be involving all the 4 rounds together, right? So
yes, all the 4 rounds together. Yeah.
So Shashi, you're saying like the first round of investors, it's already done and it's locked. Like you are looking for the second and further rounds.
Second round now. So we have about 65 people who have paid $1,000 soft commit. They all get into the queue based on their transfer of money to my bank account. Now, the reason I can't say how many people out of them would be part of the round 1 is some of them may invest 50, some of them 75, some 100. Based on those numbers, the 1.5 will get filled up. So it may be filled up by 35 people or 43 people or 55 people. If everybody says we are only putting 25,000 each, then it's a straightforward 1.5 million divided by 25. That's the number of people, but that's not going to be the case. Does it make sense?
Yeah. So we should be thinking it's a second round and it's not equal shares.
So it depends on when you have transferred that money. Maybe I'm just going to reconcile the accounts and then start putting into an Excel based on the list of people. And maybe I'll just publish that. I don't know if I want to publish the names of the people. If everybody would be comfortable, maybe I'll just publish something like a unique number, something like that, so that you would know where you are in the queue. And if there are few people dropping out, and you're automatically, you would be getting into the first round, depending on where you are.
Okay.
And there are chances that existing people may increase the amount of share. And so people would be pushed into the second round too. Will not be able to stop that. Okay. But by the way, I mean, at this point, between round 1 and 2, up to round 4, I don't think anybody should worry about it, because the biggest play is going to be what's coming in. We are just at the beginning of this. This is the tip of the iceberg. We are getting into the huge business, which gets into multi-million dollars. So don't even worry, even up to 4th round. What we are going to raise after that is going to be exponentially high. We're going to get into Start Engine, wherein we would want to have multiple thousands of small investors, small number of investors coming in. The premium would be extremely high there, because by then we would also have bought the property. We would also have planted trees. Based on the development, our value of the company would increase a lot. And I will be able to sell it at a much premium rate, and we would be able to make money for everybody.
And I think for your 2nd, 3rd, 4th round, for that also, the timeline is in 2 to 3 weeks.
Within next, I would say, everybody be prepared for next 3 to 4 weeks, and maybe 2nd, 3rd, and 4th round may get a little bit delayed, but then I wouldn't think that, because the moment we see the contracts done, we would really push hard on this one, and we see a lot of interest in the people. So if you are in the round 2, be prepared within the next 2 to 3 weeks. Round 3 and 4, maybe in 6 to 8 weeks, I would say.
Okay.
And mostly all of you will be in round 2, if not for 1. I mean, I don't know how many people where they are, but they will all be in the round 1 and 2 so far. And I wish I have a concrete answer in this funding model, but things are moving at such a fast pace. And then because of the holidays, I don't have real advice from these people on exactly what the models are about. So before you start making any commitment into the actual investment and actually paying money, you will have all this. So let's go with the concepts at this point of time.
Will you have a portal where we would be able to see our investment and number of shares issued?
Yes, we would get into those models. We're considering Carta. If you have any experience in that, look for CARTA. That's one of the cap table management software, and they would also issue these securities. And or we're looking into one of the platforms we'll get into.
And the communication, you're still going to keep it with the Facebook group, or you're trying to divert it somewhere, like just with the investors?
We will just make it with the investors, but then updates will always be open in the public on every aspect of the farm. Everybody would, because that's how we will get more and more investors.
Yeah.
Yeah. And by the way, the profit to the company is not just from Sitafal. The profit to the company is by the perception of the company in the industry. So we would do everything to make it high.
Got it.
Any close communication with the investors? Yes, we will have our own platforms wherein ideally we would go through certain portals, update all these things. Yeah.
Back to my question, Sasi. So we go to Carta and we will have a login there?
Yes, we'll have a login. You will see the number of shares that you have. And let's say if you're getting into Start Engine kind of ones, you will have your portfolio there. You'll be able to make the trades. You'll be able to buy more shares. You'll have all those options.
Okay. And you will let us know what our username, passwords would be and all that.
You will create your own. It's very simple that they are doing it very well. You will create and you will find a project and you will click on invest, you will make payments and you will see everything there.
Okay, I thought you said wire transfer. So it's actually through Kartra?
No, so depending on how it goes. The initial, okay, there are two ways we will be doing. One is 504 funding model and another is a regulatory crowdfunding model. I'm bringing many concepts and these things would be finalized based on the attorney's advice. So consider for now 504 and regulatory crowdfunding. Most of the 4 rounds would be, or at least 2 rounds would be on a 504 capital raise models. So in those cases, we would go with the Kartra type of platforms. Regulatory crowdfunding, we would be going with the Start Engine kind of models.
So the first round, say first 4 rounds would be through Kartra then?
No, let's consider first 2 to be that. I'm not sure at this point.
You're not sure?
Yeah. So we need to really, there are too many concepts. You know, there's restrictions on accredited versus non-accredited investors, number of investors. There is a blue sky laws and many things that's coming into. That's why I'm not able to give a concrete answer on that part.
Gotcha. Okay.
Yeah, I think that's one of the sensitive areas. Shashi, you may want to, get a, clarity from the attorney, because especially when you're rising from public, I know it's not a public one, but there's a lot of sensitivities, clauses around that one. So.
Right. That's why we're more or less trying to get into the proper regulatory crowdfunding where there is a portal and there is the solicitation and everything is involved in that clearly. So for now, let's assume that the logistics of how exactly is not clear, but the concepts, let's talk about the concepts and we'll get those clarities soon. And anybody has any inputs on these models, please feel free to drop me a note and we can always brainstorm, because I'm too much immersed in the learning these things, and any kind of input is highly appreciated on that. And none of
I
this,
think nobody touched on one of the, yeah. Can you just talk about sweat equity you're talking about and the salary and how is the, obviously you're investing a lot of time.
I'm sorry, can you repeat that?
Sorry, I was talking, I don't know, before I joined, you already spoke about, the sweat equity and for your share, the salary.
Okay, great. Thanks for that. Yeah, so initially when we started, when we were talking about a partnership mode, I talked about 3 components for me. One is 10% sweat equity, $40,000 for that particular project, and 30% on the profit. Now we are completely changed into this. So I'm making into 2 components. One is I will have the 40% sweat equity and I will have $50,000 for every $1 million raised. Those are the components that we would be getting into. So once we have the structure clear, that will be part of the terms and that will be part of the PPMs. Now, the way to explain is this. We are going to put more or less 10 million to be the total valuation of the company. We will raise $6 million. $6 million will be 60% of the company. Now I will have 50,000 for every $1 million raised as my salary into this. My idea is the moment I raise off this capital, $6 million, I will start completely into this full time. If I'm not able to raise that, I would continue to handle this, but at the same time, we will do it in a slow way. But looking at the current way of raising, we will be able to raise 6 million there in that. So those are the 2 components that we will be getting into.
What's the percentage you said as sweat equity? Because
40%.
40%, okay.
So earlier 10 plus 30. That's possible in the typical LLC model where we can get into that, but in these models we'll not be able to differentiate that. So we're combining that and making into 40% sweat equity, 60% to be the capital raise, and compensation of 5% on every $1 million, 50,000 on $1 million.
So 40% means like if you can you explain in terms of so let's say you raise $1 million. So how much that would equate to?
No, so we are clearly raising $6 million, right?
Okay,
so
$6 million. So
we are valuating the company at $10 million. We are raising $6 million capital. So 40% is my equity and 60% is investors' equity.
So if 50,000 per million, that's how much? 6 times 50,000, right?
Right.
Is that like a salary per year?
Yeah. So we have to look into what we call it as according to the attorneys. Yeah, but that's going to be the operations output cost that you will be getting out from the company as a cost.
So that's per year, right? Shashi,
That's
again,
per
just
year.
want to make sure it's...
That's per year. That's right. Yes.
And that will increase every time you raise $1 million after 6 million?
After 6 million, every $1 million, yes. So here, let's take an example. We get into a new land and we get into the new line of business that requires a $4 million. So that would increase that for every, so the way we are setting it up is the amount of operations that we would get into is defined by the amount of capitals we are raising, because we are raising the capital because the operations are increasing. The activities are increasing. That's how we are raising this capital. And so the compensation is increasing. And at the same time, the valuation of the company has to be raised to make profit for every investor. For that, we need to raise the capital. That's where we are putting a compensation such way that my work would have to be directly proportionate to the amount of capital, amount of valuation that we are increasing. Only when there is a valuation increase, I will be able to make money for myself. If the valuation is not increasing, we are not getting new money. And so the value of the existing investors is not increasing. Then that's when I don't make money.
Okay, so out of the 6 millions you're raising from the 4 rounds, so how much would be your equity? Let's say 40% of that?
No. So 6 million is equal to 60%. So my equity is 40%, not out of the 6 million. So company valuation is 10 million. 6 million is raised from the investors. So that means my equity is 40%. So which means if you understand the pre-money valuation plus capital raise plus post-money valuation, pre-money valuation in this case is 4 million, capital raise is 6 million, the post-money valuation of the company is 10 million.
Okay.
But one question, let's assume we raised from, members 6 million.
Yeah.
And you are assuming, it's a 10 million as a valuation, but let's assume it's not 10 million. Let's say it's 8 million. In that case, yours is going to be 20%?
No. So mine would be constant 40%. The assumption of 6 million is equal to 60% is based on 10 million assumption. So 10 million is what I have to show you the data and on what basis I'm looking at as a 10 million. So based on the number of acreage and what is the revenue, what is the profitability, and that's the model that's the data we'll be talking about. So let's take a company to be valued at 8 million. Now 60% of 8 million is 4.8 million, which means we'll not raise 6 million. We will only raise 4.8 million.
Okay. But the company valuation has to be more than what we raised, right? So that's how that 40% comes in, right?
Correct. So that's why I'm saying if we raise 6 million, we are saying 6 million is equal to 60%, right? That's why the valuation of the company is 10 million.
Okay. But that's on the paper, or that's something, I think someone also asked the question, are we using any scientific method, just to come up with the value?
Yeah, the method is, so how do we evaluate any company? What are the assets of the company and what are the possibilities of the revenue? What is the cost of producing that revenue and what is the profitability, right?
Right.
Now with that, your profitabilities across 10 years, if I show like this, okay, and we are talking about total revenue of 35 million for a 40 acre. We're talking about still 40 acre, not even the rest of the complete acres. Cost of $23 million and profit of $12 million. We also have to talk about the discounted cash flow. Your 2.2 million in this year 8 is not same today, right? It's a less value. So there is a method of discounted cash flow. So that's where we would be calculating and arriving at that method. So at a high level, we are clear that it's going to be at least at 10 million. So that's where we are making these assumptions and going with 6 million because of the cost that we are planning also, and then putting that number.
Okay.
One of the way we are clear that we need 6 million is because of the number of properties that we are buying and the cost estimate of what is the amount that we need to make this amount of acreage of farms. For example, if you look at the budget planning here, you would see irrigation sublines for 40 acres would translate into this. And let's say the number of trees that are required, plants cost. Each plant costs at $20. The number of plants at 17,600 is the 352. All this will translate into certain numbers here. So based on these numbers, we would look at what is the amount of money that we want to hold and for how many years. And then we are estimating it to be at 6 million, but that including the purchase of land and the amount that is required for various operations. Now, let's say in the number 4, trading and distribution. These are many unknown variables in this, in terms of the cost. So not knowing what exactly the cost is going to be, I don't want to estimate and raise 6 more million upfront. We want to get into that. Starting with our current 6 million, we want to start with that, get a right estimate, and then raise a $4 more million with a higher valuation of the company. Let's take a simple example. We talked about 10 million as the valuation of the company. We raised 6 million. We got into the business. In 3rd month, 4th month, we got clarity on what is that we would need more for Indian vegetable trading and distribution. And we will raise the value of the company to 16 million or 18 million, and maybe raise only 4 million out of that. So let's, for the number's sake, let's say we raise the valuation of the company to 20 million. Now, what happens? And we are getting only 4 million funding, capital raise, which means all your existing shares are increasing exponentially already. Right? Now, all the shares and valuation of the company is on the assumed values, is on the ideas that we're talking about, is on the possibilities that we are getting into. Otherwise, if at all we are waiting for the valuation based on the actual outcome, it's going to be after 4 years in the area of Sitafal. It's going to be after we get into the distribution, maybe after 1.5 years in the Indian vegetable garden, Indian vegetable trading. So we will not wait for that. We will make certain assumptions, and the investors, the future investors, would be buying the shares, looking at what progress that we have already made, how the entire company is running. Based on that, they would buy the shares. Does it make sense? What we'll also do is we'll also put up a model on how it will look like. As an investor into the first round, what would your share would look like when we raise further capital of, let's say, 4 more million? And we will also talk about when we are planning. But so far, the clarity that we have is for the next 4 rounds, the total of 6 million and the amount of activities that we wanted to do. So I'll also complete my model on how many total acreages of what fruit and what is the total revenue and profitability that we are getting. The way I have projected it for Sitafal here, I will complete for mango and others. And we'll talk about by putting 80 acres of our land into production, what is the profitability in 10 years, what we would be achieving. If I just do this, let's say if we decide and make 80 acres of complete Sitafal itself, we are talking about $48 million to be the profitability itself, right? Now, these numbers is extremely high, but then look at the amount of produce that we are making, right? And the reason the number looks very high is we are not able to, so far we wouldn't have seen the kind of operations as big as this, which means, do we want to get into 80 acres upfront? No, we will start with a small acreage of maybe 40 acres. And we will also follow up through the actual production numbers. While we are looking into this number 4, we would be assessing the demand in the Indian market. How much of the produce can they buy? How much of Sitafal can they buy If it is too risky for large acreage of Sitafal, we are anyway diversifying into guava, diversifying into mango. That's where the adjustments that we would make. But then, first of all, I was surprised looking at these numbers, but having gone through multiple times on these numbers, they're quite doable.
Shashi, one more question. Like, if you hire some board of advisors for the company, how do you compensate them? What is the
model? We don't have a compensation model for the board of advisors. So the advisors are voluntary advisors. For example, we have identified a person, Chaitanya, who is a board of advisor, who's specialized in Moringa, right? He helps us because he's interested in this growing. He's out of India, and he has agreed to help us with that, because we don't have a compensation structure for board of directors. But if there is a real need for their skill, we would pay a consulting fee and buy the skill, take the service. At any point of time, if there is a specific need, we can always consider based on what input we are getting, how it is helping the company, and then we can take it there.
It's a consulting service.
Yeah, consulting is the most easiest option. If we are getting a value-added service, yes, we have to pay for it. All right, any questions?
Thanks for the session. Thank you.
Oh, no problem. Looks like we didn't realize the time. It's 10:45.
Yeah.
So, I will go to share the recorded session. Please go through this. I understand the share model is quite confusing. I'm also going to invite a couple of experts into this who are going to explain this. So we have few of our investors who are like very strong advisors in this area. I'll have some sessions. I'll also have a session along with an attorney. We will get these concepts cleared. Out of all the sessions, what you have to go really think through is, how do you measure the success of the company? How do you measure what you're investing and how are you getting the return out of that? So the moment you get clarity on this, we'll have a great path. Right now, for that, whatever is input required, keep your questions ready. And during the journey in the next few days or so, we will ensure to get the answers. And you will all get into this only once you have the answers. We have no hurry. We can always do small acreage. We don't need to do all acreage at a time. But then based on whoever is willing to get into, we will take it forward and then we'll get into this. All right. Thank you so much for everybody's time, and we will be in touch. Please drop me a note with any questions that you may have.
Thank you.
All right. Thanks, everybody. Bye-bye.
Thanks.
Thank you.